Markets brace themselves for Trump. Donald Trump will be sworn in today as US President, with traders preparing for another turbulent four-year term. But just what can we expect this time round? Moneta's global chief market strategist Aoifinn Devitt is here to help answer that. Aoifinn, let's start with some of the market moves since his election, especially in the bond and currency markets. We've seen rising yields and a strengthening dollar. Are you surprised by the scale of the moves in both of these?
I'd say yes, certainly. Let's start with fixed income. That's shown more volatility relative to equity markets for some time now. And I think what's been really interesting has been the volatility that has persisted there, but also the somewhat U-turn that we've even seen in the course of a week. For example, last week, where we went from thinking the employment numbers are too strong, we're going to have not cuts this time, but actually rate rises, to seeing the CPI numbers come into check and saying, oh no, we're back to rate cuts again, but probably only one. So I'd say that kind of volatility has been surprising. It's definitely the case that the bond market is the market that is thinking about concern and not just positive news. When it comes to the dollar, that's not that surprising. This is a very dollar positive administration. The only issue is whether the dollar gets too strong, and that effect starts to affect the US negatively.
Now, traders seem to be assuming that a Trump presidency will be stock positive. Are they right?
I'd say they are, yes, for the most part. The only issue is how much has already been baked into the price there. We've seen that with tech stocks. There's been very solid momentum. I'd say we are getting into the frothy territory there with tech stocks at the moment. And we can see that the readiness of investors to sell off when there is a little bit of negative news. We've seen that around Nvidia, and also even outside the tech sector, pharma, the weight loss stocks, again, a bit of give back there. So not the most comfortable and calm equity markets when you start to look underneath the surface. As far as though what it's likely to mean, we do know that the tax cut policy, they're likely to remain permanent. There'll probably be more incentives, the lack of regulation. That all stacks up very well for corporate America that was already doing quite well.
Now, crypto again is under the spotlight. Trump himself launching a meme coin and Bitcoin hitting another record high. What exactly does Trump bring to the crypto universe?
He definitely brings validity. He brings some source of enthusiasm and excitement. I'd say even the most hardened Bitcoin and crypto fans were somewhat surprised by the meme coin launch over the weekend. They are actually a little dismayed by it because it's just that kind of volatility and speculative activity that is what actually can diminish the reputation of cryptocurrency and lead it to be seen as a fad or something that is short-lived. So I'd say it's a thin ice that's been tread right now as it comes to crypto. What is he bringing to the table? Well, we certainly know there's that tailwind of much less regulation. As far as the actual use case, though, I don't think we're that much further along to seeing this being a solid use case. And we're certainly, as investors, not further along to knowing how Bitcoin is likely to perform in the case of a market crisis, or just when market conditions change. We know it's firmly risk on today. We've seen that in the recent movement, but we don't know how this fits in a diversified portfolio. So investors should tread with caution.
Aoifinn Devitt there from Moneta. Don't forget, you can watch more videos on Reuters.com.